Going live. Good evening. Good evening. If you guys are watching live, I truly appreciate it. If not, this is an episode you do not want to miss out on. All right, so we have Josh Roosen. And so, funny story is, Josh and I went to high school together. And now, funny story, not necessarily funny when I look back and doing it's a little sad. But as always a shy person, I kind of kept to myself. So I kept like a really small circle. And I think it was Ryan Garland. We probably intertwined our circles. Yeah, Ryan or Corey. So we even talk about this off camera, but I'll have to tell Ryan to watch this episode 100% when he gets a chance. I know he's got a full family right now. But let's dive right into it. Josh just schooled me with so much real estate game in just the past 15 minutes. So he's got a bunch of knowledge to drop on you guys. So Josh, take it away. Just tell us exactly what you've been up to since high school.
Awesome. First, thank you, Claude, for having me. Hope to add a lot of value to your audience. So let me kind of tell you where I'm at today, and then we'll kind of work backwards at how I got there. So currently, I am a multifamily investor. I have 11 apartment complexes I have equity in. 10 of them are joint ventures. So just me and a couple partners bought them with our own money. The 11th is syndicated, meaning we raised capital from investors to buy that deal. Now, that one is by far the largest. It's a 143 unit complex. In total, I have equity in 442 units. So sure, that sounds good, right? But obviously this didn't happen overnight. It happened over time. And I think really where all this starts is one of the books that's above your left shoulder, Rich Dad, Poor Dad. Now, I was very fortunate in eighth grade. I had an aunt who's in real estate, actually in Michigan, and she gave me that book. Now, in eighth grade, I read it, but it didn't really do much, meaning it planted a seed, but I wasn't really thinking, hey, let's go start a business, right? But still, it planted something in me. And then fast forward to college, I'm going to Central Michigan University and I'm pre-med. I want to be a doctor. Now I'm working for an orthopedic surgeon, and this gentleman comes home one day and he's like, hey, don't do it. I wouldn't let my kids do it. You're crazy. And I'm like, what? Like, I'm getting ready to graduate. I just invested some money in an MCAT course to study for it. And I'm very confused, right? Because this guy is doing way better than my family did growing up middle class. And there's nothing wrong with that. However, I'm just like, I don't get it. Explain. Right. And he's like, look, when I was in the 90s, I made 7 figures a year. And now I'm lucky to make half that. And I'm like, hold on, dude. You're complaining about making $500,000 a year? Like, must be nice. Good problem to have, you know? And so this gentleman then, he's like, look, you don't get it. He's like, how much debt do you have from undergrad? And I had, dang near 6 figures. He's like, okay, you're going to incur another couple $100,000 in medical school. And I believe by the time you graduate medical school, residency, and maybe a fellowship, you'll be in your early 30s, couple $100,000 in debt. And he said physician reimbursements are going to continue to go down to $100,000 to $200,000. He's like, you'll be living in a 1-bedroom apartment for a decade just to get out from under that debt. So I'm like, okay, well, I have a biology degree. What do I do? Right. And so basically he's like, I make more money from business than I do being a doctor. Go into business. That's where I would 100% go. So that's kind of where my launch into entrepreneurship started.
Okay. All right. And what was kind of your first, let me take it back. Who was your first mentor? Did you have a first mentor before you had your first deal, or did you have your first deal and then you met your first mentor?
Yeah, so I think I had mentors first, but sort of in an indirect manner, meaning when we were in high school, I worked at Genesis Athletic Club. And as you know, it's a nicer upscale athletic club. So there was a lot of doctors, lawyers, and entrepreneurs there. And getting to know a lot of those families, seeing almost like the Rich Dad, Poor Dad, how they thought and acted differently and had different results than my family, really started inspiring me. But my first big mentor would have to be the doctor I work for, Dr. Yakison in college. As I developed a really close relationship with him, and that allowed me to, kind of get more insight and have more of a mentor-mentee relationship. And in fact, I mean, he redirected the outcome of my life from going to medical school to then entrepreneurship.
Okay. And can you tell us about your first deal? Was it a single family or was it a multifamily?
Yeah. So this is actually a good spot in the story. So let's continue from there. The doctor said, hey, don't go into business, don't go into medical school. So I move home. Ultimately, my first deal is a single family home. I think that's where most people start. And basically, what I tried to do first was just go into business. I wanted to open a home healthcare company.
Okay.
And so I went to Starbucks and Panera every day, like 9 to 5. I treated it like it was a job. And 6 months in, I had business cards, brochure, LLC, Google Voice number, a website, but I hadn't generated any revenue. Claude, I didn't know the difference between activity and accomplishment. And so my parents, with their middle class mindset, nothing wrong with it, were like, Josh, it's time to grow up and get a job. Like this whole get rich thing in entrepreneurship is a fantasy. So at that point, I took a job at a weed control and fertilization spot in Grand Blanc just to appease them because they were going to kick me out of the house. And I was able to save up enough money to buy my first deal. So the first deal was a single family home I bought for $102,743. Yes, I remember the exact purchase price. I used an FHA loan, so 3.5% down to move into it. So between closing costs and the down payment, I was about 5,000 into it.
And this
And
was
then
again in what year?
2015.
Okay.
So I bought it 2015, and then I didn't end up moving into it. And I moved a buddy into it for $1,200 a month. My rent, my mortgage, taxes and insurance were $707 a month. So I was netting just under $500 a month. I self-managed it. And then I ended up selling that deal after he moved out for $144,000. So I owed maybe 97 on the mortgage. And I really saw the power of investing in that deal.
Right. Can you take us back? What type of principles or what did it take in order for you to save up that money? What lifestyle do you feel that you had to instill in order to save up that money, in order to make the sacrifice in order to have the house?
Ooh, that's a great question. So at the time I was living at my parents' house, and I think keeping your bills as cheap as possible is very important. And so a good example of that is after that I moved to California and I was making a couple hundred grand a year, still didn't buy a car, was living in a nasty apartment with popcorn ceilings that was 440 square foot. And so I would looked at my money as soldiers, right? And I could send them to die if I bought liabilities,
Uh,
or I could have them work for me if I bought assets and come back with more soldiers. And I knew the more of them I could send off to work for me, the faster I could be financially free. And instead of me trading time for money, have my money work for me.
you said that it made me think of Rich Dad Poor Dad. I don't know if there was necessarily something that stuck in my head as far as a sentence or whatever he said in the book, but it made me think of that book. You kind of think of them as soldiers, and it also brought me back to poker. A lot of people go to the poker room and they some people go for entertainment, right? And they don't care if they win or lose. But a lot of people take it very seriously, and those chips that they purchase are their soldiers in order to, come back with more chips, more soldiers to, win the battle later on down the road. So that was awesome analogy. That was great. And so after that first purchase, how did it snowball in order for you to get? You said 442 units. Is that 442 doors?
Correct. It's 11 complexes, 442 doors, right? So then you're right. There's a big leap from a first single family home to then owning 11 apartment complexes.
Mhm.
So from there, okay, let's start. I'm working the job at, Lush Lawn, the weed control and fertilization spot, and I'm doing okay. It's a sales job on track to make 60K a year, more money than I ever made in my life. However, I looked around at my coworkers and really great people, but they weren't who I wanted to be. I thought I could attain more. And then I also looked at the trajectory of where that career would take me. And my best case scenario was a branch manager making 100K a year. Now, again, nothing wrong with 100K a year. I just knew I was capable of more. So what I did was I started looking at other sales jobs, and I happened to find one in the real estate space. So it was for a real estate education company called Fortune Builders, and it was in San Diego, California. And so all I thought at the time is, hey, if I can go seek to serve, because I didn't have a lot of wealth at the time, rather than pay to play to get access to this knowledge, education, and community and network, then I could work my butt off to implement it and then build my own business. So that's what I did. Found a job in San Diego, started working there. And I really think the best analogy for what happened there was they used to talk about you come there a caterpillar and it's hard. You're struggling. It's discipline. It's dedication, but you leave a butterfly, right? So you're
Yes.
going through this process, but beautiful things happen at the end.
Awesome. Awesome. Uh, Now this came to my mind. This kind of takes us back to the first purchase. Growing up in Michigan, and it's more affordable than it would be. I'm assuming probably it's more affordable in Florida, and then it's more affordable definitely than where I am in the DMV. Do you attribute the ability or the fact that you were born in Michigan, really almost kind of getting lucky to have the opportunity to buy that first purchase? Whereas if you were kind of born in California and you stayed there for school, it'd be so much more difficult for you just to get that first home.
I never thought about that. That's a really good question. And I think I agree with you, right? Because that first one is sort of the first domino that fell that created everything after. And it was really a proof of concept because when you read something like Rich Dad Poor Dad or a real estate investing book, it's a different way of thinking. But when you taste that and get those results, then you're hooked. You're like, how can I get more of this? So I agree with you. And I do think that helped a lot.
Right. And so at Fortune Builders, you mentioned coming in as a caterpillar and then blossom into a butterfly. What did you learn during that time in order for you to blossom and then go on your own and uh, be a full blown entrepreneur? And we'll talk about your business that you're starting next year.
Yeah, so that's great, man. As I was there, they just required a new version of me, meaning our work ethic that we put in there was, I mean, we were working 65-hour plus work weeks. And so that basically what that created was I had never done that before, right? And then I was using my free time to study and even better myself and more personal development. And also, they had such a growth mindset culture, right? They're always pushing each other in sales roles like I had there. Basically, you have a scoreboard, right, of how much you've sold, what you've sold. So the results were very public. And also, I learned the more you sell, the more you'll make, right? Your income is solely dependent on your performance. And I want to do well. So that really helped me transform and learn and grow into the best version of myself. They had book clubs. A lot of people were investing in mentorship and coaching. And in fact, I brought on a John Maxwell leadership coach at that time who really, really helped me. But eventually I got to a point where I scaled into that company where the next step was upper management. However, upper management was already set, meaning I was kind of in a spot where I couldn't trade any more time for money. There was no next step for me. And to be in my, at this point, late 20s was kind of scary. So I started looking around at other ways I could add income.
Okay.
And a buddy of mine, actually, we were going to open a sales training company. And so he paid Grant Cardone $7,500 for 1 hour one-on-one, flew from San Diego, California to Miami to meet with Grant and said, hey, Grant, I want to open a sales training company. And what Grant said actually changed the direction of our life again, right? So obviously a lot of these mentors have really helped shape us. So Grant said, hey, son, if I was your age and I could do it all over again, I would skip sales training and I'd go straight to apartment investing. If I would have done that, I'd be a billionaire instead of a millionaire. The only question is how many times over. So Claude, hearing that, we were focused on becoming millionaires at the time, right? Billionaire wasn't even the question. And so
Okay.
we're like, a billionaire, And so then he came back. We independently had lunch with the owner of the company, Fortune Builders. His name's Than Merrill. Than went to Yale, played in the NFL. I mean, he was the star of Flip This House, which was like the first home flipping show. So rock star guy. And we knew he had a 9-figure net worth. And independently, he said the same thing. If I could do it all over again, I wish I would have skipped residential and went straight to commercial investing. So at that point, I had two mentors that I knew that had a 9-figure net worth that said this was the way to go. So this is late 2017. We start studying apartment investing, right? We start listening to all the podcasts, picking up everything we can on YouTube, reading the books. And then eventually my buddy found these two guys, their names are Jake and Gino, that were apartment investors that were trying to start an educational course. And as we were in an educational company, he was like, hey guys, look, I'm very versed in this. I'll help you build this if you teach me how to invest. And they kind of pushed him off, shoved him away. And he was like, okay, I'm going to continue to find out how to build my apartment investing business. Well, as you know, California is not a great market for it. It's not very landlord friendly, and you have to buy stuff burnt to the ground to get it to cash flow.
Wow.
So he moved to Atlanta, Georgia, and to start building his business there. Now, these guys called back when he made the move, Jake and Gino, and said, hey, we're looking at hiring someone. Are you still available? And then at that point, he's like, look, I'm not, but I know someone who'd be a good fit. Put him in touch with me. And then it led to a real crazy decision in my life, Claude, because I had a job where I was making a couple $100,000 a year.
Yeah.
I really loved it, but I was kind of maxed out, right? There was no more growth there. And then I had the potential to be the first employee in this startup real estate education company, initially take a pay cut, but eventually be able to build that up to something larger and be upper management. And so I reflected with a lot of my mentors, kind of had a sounding board of advisors, if you will. And I decided to make the leap. So March of 2018, I moved to St. Augustine, Florida, where Gino lives. And then we started building the education course. And then later that year, October of 18, closed on my first apartment complex. It was a 132 unit deal we bought for 5.9 million that we syndicated.
Okay. All right. So I have a couple questions after that. A couple of the books that you read, if you're a single family investor and you want to kind of get at least your mindset into apartments or multifamilies, are there any books that you suggest reading?
Okay, so Wheelbarrow Profits by Jake and Gino, so that the mentors I had is a really, really good one. Dave Lindahl has two really good ones. One is called Multifamily Millions. The second is called Emerging Markets. If you can read those three books, I think you'll be in a really good position to fundamentally understand apartment investing.
Awesome. Okay. And what made you trust or believe and take that leap of faith from having a comfortable job where you said you were making a couple hundred thousand a year? What what makes you take that leap of faith and you know you're content here, you know you can be just fine. What about you, or what do you think is about all those individuals that strive for more? What is it that pushes you to kind of take that leap of faith and take the risk?
Yeah, Claude, again, another really great and insightful question. So I knew the certainty of outcome if I stayed where I stayed, right? And I was scared of being capped out on my growth. And I would rather take a risk and a bet on me, and it paid off, right? It's like if you can push your chips all in, to use a poker analogy, on yourself, I'll take that bet all day.
Right, right. Great answer. I love it. What are some of the pitfalls or greatest risks, differences between single family and then multifamily apartments, hotels, or things even larger than that for investing?
Yeah, so I've never done in the commercial space anything beside apartments, right?
Okay.
Obviously, we own some storage units that the apartments have, but it's not our wheelhouse. So if you're going to look at it, here's the thing, right? If you buy a single family home versus let's even say a 10 unit, if
Mhm.
your numbers aren't off, if you're not educated, you don't have the knowledge and understanding, and let's say you're off by $5,000 a door in your rehab, right? In the single family home, you're only off 5 grand. But if you're off 5 grand a door in your rehab on the 10 unit, you're off $50,000. So sure, there's much more upside, but
Right.
there's also much more downside risk if you don't have the knowledge, right? That's why I believe the education is really important. Now you asked, hey Josh, why would someone want to scale to that? And that's a great question. So I can much easier because of economies of scale grow my portfolio. So for example, for every 100 units, I can afford one full-time leasing agent and one full-time maintenance person. So this is much more a business. And it's also better to have 10 units under one roof than 10 separate units all throughout the city. That's 10 different roofs I have to worry about replacing. And then if we look at that 10 unit apartment complex, I'm going to guarantee there's maybe one or two layouts where they're all very similar. So it's not like, hey, the water shutoff valve is in this weird spot in this house and it's in another spot with this house. So again, your systems and ability to scale is much better.
Okay.
Now, single family homes, they're valued based on comps, so comparable home sales.
Yeah.
I don't have a lot of control on that. Multifamily is based on the income, and I can control the income, right? I can raise the rents, I can lower the expenses. I can charge other fees like bill back the utilities, late fees, pet fees, various things like that.
Okay. For the multifamilies, are you purchasing existing structures or are you building from the ground up?
Ooh, I would love to one day get into development, but what I do if you really zoom out is I buy existing assets that are cash flowing from day one. So I buy 70s, 80s products, so B and C assets they'd be called, and then I make them more efficient. So what I look for is something that's sort of, let's say, run by a mom and pop owner. And what that means is there's probably some deferred maintenance, right? They might keep them clean, but things aren't 100% updated. And they also probably really love their tenants. And so they're not really raising rents to what market is. And now I don't come in there Scrooge McDuck landlord and just raise the rents all the way up. What I do is I add value to the property. I clean it up. I update it so it's really beautiful that they're living in there. And then I take it to market rent. So I create a safe, modern, and affordable spot for them to live. And then when I do that by increasing the income and running it more efficiently, that increases the value of the property. And so that equity growth is what's really created my results.
Okay, so I'm coming in without, so I'm gonna ask all these questions because I'm coming in
Please
without
do.
having any knowledge at all. So are you in? So a deal that like you just discussed is are the owners reaching out to you and say, "Hey, I need help. I need more. I'm not generating enough revenue." Or are you kind of coming in and you're maybe driving around and say, "Hey, this apartment complex could definitely get a little bit of an upgrade. I think I could help them."
Yeah, so you're asking about deal sourcing. Great question. I wish I had owners calling me and my phone ringing.
Okay.
However, I haven't figured out how to just make them call me and get direct to their brain. So the ways we source deals in multifamily is one through commercial real estate brokers, right? They're kind of the gatekeepers. And
Okay.
so what those guys do is they reach out and they'll be like, hey, XYZ owner, I see you own XYZ asset. I would love to give you a broker opinion of value. And they try to add value and have those relationships. And then just like a single family or a residential broker, they'll get a fee for it, but they do much or fewer transactions because they obviously make a lot more on each transaction, right? It's a much bigger number. The second way is we go direct to seller. So 2 weeks ago, I dropped 1,500 mailers off to these owners, letting them know that I have capital to place and I am a buyer. And then we also have an email campaign. So we skip trace, get the LLC. Then we skip trace the LLC to get the owner information. And then we're contacting them direct to seller in order to get the best price, right? Because a lot of times with the brokers, what they'll do is they'll tell the seller they can get the highest and best price, right? And then you're competing against other people they're shopping against. If I can cut that competition, go direct to seller, I may be able to get a juicier deal. But obviously, that's much more time and resources to do that.
Okay. So are more of your deals that mom and pop they're done, they want to retire and they just want to sell the business outright? Or is it mom and pop need some help, need some capital in order to maybe grow their business and they're going to give you maybe a percentage of it? I'm not sure if that's how it works.
Yeah, so it's more the former, right? They're looking to retire. And so it's like you said, right? That first asset we bought was built between 79 and 82. They inherited it. It was the only asset they owned. So, right, it got passed down because of a death. And then to even give deeper into that deal, when we bought it, on average, rents were $550 throughout the complex.
Hmm.
Market rent was 700, right? And so what we did was we went in there, we had a 300K renovation budget. We resurfaced the countertops, we painted the cabinets, we put in new knobs, did luxury vinyl plank, and then reposed gray on the walls. We really spruced up the parking lot. So we striped and resurfaced it. We made it look a lot prettier, added a dog park, so some amenities. And then 3 years later, we were having units lease up at over 800. And then we sold that complex for $10 million. So we did very well.
Wow. Okay. So are you trying to kind of just come in and flip them, or are there ever assets that I guess if they're great properties and great locations, you hold on to them long term, or are you kind of always trying to exit?
Ooh, great question again. So the answer is buy and hold is my true long-term strategy.
Okay.
However, getting started, I didn't have a tremendous amount of capital. And so we syndicated that deal, meaning we raised capital from other investors. And basically, when you syndicate, you do sell and exit, right? So
Yeah.
whether it's a sale or things like that. But the deals I own my own money, what we do is instead of selling them, we refinance, right? And after we force appreciation and the deal is worth more, we're able to pull out usually most of our capital, if not all or more than all of it. And because it's a loan, there's no interest on that, right? So it's a tax-free thing. Then I still own that first asset. It's paying me with none of my own money in it. And then I roll that into the next asset to allow me to continue to buy more.
Okay. Are there ever opportunities? This seems like what we're discussing is only apartments. Is there ever times that you come in and do the same type of deals with single family homes and then help someone raise their rent?
So no, at this point, I've scaled up to sort of my niche is multifamily.
Okay.
Maybe if there was a killer deal and I had inventory that I own by there, I would
Yeah.
consider it. However, I kind of try not to get shiny object syndrome and deviate from what I perfected, right?
Okay. Okay. It didn't seem like it'd be at this point be worth it, and maybe starting up. That would be a kind of a route that you could go.
Yeah. So, and that actually brings up a good point too, though. So another thing is when you get loans on multifamily apartments, it's called asset-based lending.
Hmm.
And so what that means is they heavily scrutinize the asset to make sure it can cover its debt obligations or its mortgage. And usually they make sure it can cover about 120% of the debt obligation after all expenses.
Okay.
And so that's so it's really good on that. Where single family homes are much tougher because it's based on you, right? They're going to look at your debt to income ratio. When I buy an apartment complex, I submit what's called the personal financial statement and a schedule of real estate owned. Claude, these things are stated. I'm not encouraging anyone to lie, but I'm saying I could put I own the Empire State Building on there and it probably would pass. And so, it's pretty incredible how much better the financing is in the commercial space.
Okay. All right. I think this is a question everybody not necessarily wants to know, but is it easier for you to, would you rather have someone who's in Section 8 or not?
So I don't do Section 8 housing. In fact, if I'm going to buy something, I look for at least 40% or less Section 8.
Okay.
I like free market housing. Government, love them or hate them. I think that when they overimpose too many rules, it gets a little controlling. And I would rather be the one to let the market dictate how I do.
Okay, so this is interesting, guys, because I want to poke this because I've gone to multiple conferences and things like that, and they've always said Section 8 is the way to go. And because, and we kind of talked about this before we got into the show, you, I don't want to, sorry, I want to say this without, I guess, ruffling feathers or being inappropriate. But
You can shoot it straight.
I guess they're always saying that you want to get Section 8 because, that's guaranteed income. Some of the other states, it's very difficult to get people out of their homes, and some people actually know how the game works in that state, and they're purposely doing certain things in order to be able to stay and live for free. So, but you prefer to not worry about Section 8. So can I guess dive into a little bit deeper?
Yeah, absolutely, man. So, okay, you bring up a lot there, right? So, you're talking about there's different states that have different rules that are more tenant friendly or more landlord friendly,
Yeah.
right? And obviously, us being in the landlord space, we want states that are more landlord friendly. So, it's not that we're this mean Grinch landlord and trying to kick people out. But
Yes.
here's the thing, if that person isn't paying their rent, you're still having to pay the mortgage.
Right.
And usually that tenant isn't living very easy in that apartment, meaning they're beating that thing up and you're
Okay.
going to have to pay the repairs of that. And
Hmm.
so, in my opinion, it's not very fair that you bear that expense. I'm all about being fair and working with people and everything like that. So, then the next thing is Section 8. Again, there's just more government restrictions and government rules with it. And you're right, it is a source of income that probably isn't going to bleed dry. However, I only invest in landlord friendly states. So I'm not having to worry about 6 months to evict someone.
Okay. So, is your strategy, because it seems like the best way to go about this in order to really flip your money and really get a return on investment, um, is kind of buying in areas that are not necessarily savory, where you probably necessarily where we wouldn't necessarily want to live, and renovate those homes, get somebody in there, and then get the capital out of there, and then rinse and repeat. Is that your strategy, or are you more so going to areas that are, um, I guess, higher, medium household income?
Yeah, so great question. As far as what I'll buy in, I'll go to the census tract and I'll look up the median income there, and I look for a median income household income of at least 40,000 or more.
Okay.
Um, you're right. You can buy in rougher areas and usually get much more cash flow,
Mm.
but there's a lot more headache that comes with those tenants. Usually those buildings are a little bit more beat up. So you're going to have more capex and repairs going into them. Where if we look at, the beautiful building downtown that's brand new, people are willing to pay much more for that because
Mhm.
you have A-class renters who generally have much better credit. They're renting by choice, not by necessity, right? Because they can afford to buy a home. They care about their credit as well, right? Where if you got the flip side of that, maybe a C or D class tenant, a lot of those people are kind of paycheck to paycheck, right? They're
Right.
struggling, they're doing the best they can, but they may have an eviction on their record and they may less be attached to their credit score, meaning they may be willing to walk away, if things flip. And so I believe the sweet spot is B and C class apartments. So that's sort of that middle zone. And the best one is you get the worst apartment in the best area, meaning you find a really good area and you just look for the beat up apartment and then you bring that up to the rest of the area.
Okay. All right. Great. I like seeing a fresh approach because everything, like I said, everything I see online, or maybe it's just the people I'm following, I'm getting the same type of people and that's the type of businesses they're doing. Um, it's almost like you're doing the exact opposite. So it's awesome to get a fresh take and not to think that this is the only way to go about this. So that's awesome. I wanted to kind of take a left turn a little bit. So I saw a couple photos on Facebook. It looks like you're doing some public speaking and talking about real estate on stages. So let's talk about that. How do you get comfortable speaking on stage? And tell us about the first time you were asked to speak, and then your most, I guess, proudest moment in speaking, public speaking.
Oh, Claude, listen, I love this, man. So I can really add a lot of value to your audience here. So how I got really comfortable speaking was actually creating a Toastmasters with a good friend. And for those of you who don't know what Toastmasters is, it's a public speaking and leadership organization. And when we were in San Diego, we joined it. We went to a couple. They weren't quite what we wanted. So we made one that had a young vibe, very entrepreneurial spirit, and we grew it with grassroots, meaning we went out there and just passed out flyers, invited our friends, told everyone about it. And then we ended up growing something really special. Now, in Toastmasters, there's a couple different things you do. One is prepared speeches, and there's a whole curriculum of it. So you get practice in a curriculum you go through on speaking and practicing different elements of a speech. And then the second part of there, they have impromptu activities where you might get asked a question that you didn't know, and you got to go speak on stage for it in 60 seconds about it.
Okay.
And so that practice in a safe zone is how you get better at it. Now, as far as speaking gigs, I've been very fortunate to speak at, for example, Jake and Gino, my previous mentors, had a conference where they had about 800 people, and I was able to speak on stage and interview people on stage. So that was really cool. Also, Bigger Pockets, their conference in Nashville a couple of years ago, I was able to go up there and introduce my mentors, Jake and Gino. So that was in front of 1,500 people. And then about 2 months ago, Rod Khleif hosted a conference, and I was in a panel in front of about 1,000 people. So those are probably my biggest speaking opportunities. Now, I also speak publicly here at like RIAs and different meetups to try to add value. Now, again, you brought up the question of, okay, so how do I get, up there and absolutely crush it and not blank out? So I think practicing is very, very important.
Okay.
I think the more you can sweat and practice, the less you bleed in battle. The second thing is rehearsing and knowing your material, meaning if you get up there and this, like the first time reading it and you got like word by word written out, you're probably going to screw up. But if I have a bullet point outline of what I know I want to say, and I've practiced the speech in the mirror, I've recorded it, I've listened to myself, I've made my friends listen to it, I'm probably going to get up there and crush it like second nature.
Right.
And then beforehand, really just realizing that there is no real harm there. I get public speaking is a big fear. But I'm thinking, gosh, it's really like, what's your downside risk? There's not a lot that can really happen to you bad up there. So,
Yeah. I guess no one wants to be embarrassed, or you don't want to defeat, or not necessarily defeat's not the word I'm looking for. You don't want to I can't think of it. Disappoint yourself. Especially if you go up there and you feel like you've practiced all day long and just like the nerves. I know for me, being at a poker table, I could play the best, but sometimes when you get a certain moment where you're playing for good money that might change some things for the nerves you can't help but, at least for me, can't help but kick in. But you gotta, I guess, own it. Just like kind of think of like Eminem and 8 Mile and all of that stuff. Everybody, I guess, internalizes everything differently, and you just got to figure out ways to overcome it. You got to know yourself.
yeah, absolutely, man. Really love that.
Hmm. So let's dive a little back into real estate. I have an idea what you're going to say, but do you think the rates for those who may be looking to purchase their first home or just another home in general, do you think the rates will ever go back to 3% anytime soon, or if ever again?
Okay, so let's start with what we saw with COVID of a 0% Fed's fund rate is abnormal, right? And I think COVID itself was an anomaly. So no, I don't think we'll get there. I mean, the Fed just said that they're going to do 4 cuts they're predicting next year. Now, what we've learned, if anything, is the Feds can be a little bit unpredictable, and sometimes they're more reactive rather than proactive. But a lot of people, what they don't realize is price and interest rate have a inverse correlation, meaning usually as interest rates go down, prices go up.
Mhm.
And so, in fact, we've seen a slowdown, right? So let's talk about residential mortgage rates. They're somewhere in the sevens, right? Maybe a little high sixes right now. And so you've seen a slowdown. So those that are really looking for deals, this could have been an opportunity. And I think when the Feds do cut rates, I think prices are going to continue to climb. And especially with next year being an election year, whatever party's in power right now doesn't want the economy to tank as they're running into this, right? They want to maintain that power. And how they do that is keeping a good economy.
Right. Makes sense. So it seems like you have a really good understanding and you really follow the stock market, probably a 2 year, 10 year, quite a bit. Can you tell us, was that back, did you get that information or how to play that when you were with Fortune Builders, or where did that come from?
Oof. So I wish I had more macroeconomics understanding, and I'm still attempting to learn a lot of that, right? Because I have a biology degree.
Hmm.
And so I think my biggest way to get this is truthfully, a lot of my loan brokers have been very instrumental in kind of helping with that. Because obviously they're the ones that have the pricing and put out the content for it. But it's truthfully just YouTube's watching videos. That's the cool thing about the age of the internet. Information is democratized. It's everywhere, right? You don't have to go to school to learn a lot of things anymore.
Right. That's awesome. So I want to dive into, we're obviously around the same age. So your parents approaching their 70s.
Dad is 64 and then mom is 60. So
So good, they're not watching. I don't see anybody watching, so they won't care right now. So my parents are terrified of the stock market because of the '08 crash. Um,
yeah.
I guess just because we're, completely different demographics. Are your parents kind of a little fearful of the stock market themselves because of what happened?
Claude, all right, so it's magical you brought this up. And here's the thing. Previously, I'd never had these discussions with my parents about money, right? It just wasn't something we talked about in our household. And I wish it was because it should be normalized. But what's really cool is, so I don't know about their thoughts on the stock market, right? I know they're very conservative and I know they put as much as they can in their 401k and their retirement accounts. However, when I first got into this, my parents were like, again, they said, we can't do this. And then when I started real estate, they're like, Josh, that's tenants, termites, and toilets. Like, this is a whole headache. You don't want that. And so then you fast forward to today, my dad has invested passively alongside me in 2 syndication deals. So I've made him money in real estate that way. And in fact, he owns a 20 unit apartment complex, 26 townhomes, and 52 storage units. So he's been able to, at first, when I told him about this, he was like, oh, Josh, it's risky, this and that, don't do it. And then when I started getting the results and he started seeing that, then from there he followed suit. And in
That's
fact,
awesome.
me being yeah, it's changed their life, right, in real estate. Because like you said with stocks, it's like, hey, I can't control that, right? If Elon Musk goes on Joe Rogan and smokes weed and the Tesla stock starts tanking, I
Yeah.
had zero control over that. Or Apple's got some program on the older phone that slows down the phones, the battery life. I have no control over that. With real
Right.
estate, look, I make all the decisions and I like that control. Like I said earlier, I'm going to push the chips in on me, not what someone else is doing.
Okay. All right. So that well, I don't have to go down that question. You answered that question. But obviously, you're invested in the stock market. But if you're going to invest, you're going to invest heavily in yourself, opposed to stocks and other things like that.
I got no money in the stock market, brother. I
Really,
stick with
nothing at
what I
all.
know and go all
Okay.
in. Zero.
All right. Do like it's just as far as putting like instead of a savings account, like because I'm sure you have to have cash on hand. Would you ever consider like putting your money just like S&P 500, like something like that, so it's diverse? You don't have to really watch it, and it's the best companies in the in the whole stock market. Or are you just
So
I'm
I
betting
wouldn't
all
be
my cash on?
opposed,
Uh huh.
but what I do right now is I have my money sitting in a money market account or
Okay.
a high interest yield savings account. And the one I
Okay.
have is with CIT Bank. They pay 5%. So while I'm sitting on capital, I do have it there. But again, my goal is to deploy it, right? Because if my
Okay.
money's sitting at home, sure, it's not out there dying in a liability, but it's also not working as hard as it could be in an asset, right?
Okay. Okay. I love it. I love it. And now, others in your circle, do they play? Is this kind of how the game is played? Is that they don't really mess with the stock market? They're real estate folks or real estate folks, and that's how they make their money, and that's where they trust, and that's where they keep their money for the most part.
Yeah, yeah, I would say
Okay.
so.
Okay. Like I told you, this is awesome because I don't get this from the You're probably on another level, so I can't even. The people that I've been watching and stuff like that, I know they don't have 442 units. That's for sure. So this is awesome. Josh, I had no clue. I had no clue that you were on this level. I was just thank you so much for taking the time and sharing so much knowledge. I truly appreciate it. This has been awesome for me.
Yeah, of course, brother. Always happy to help in any way I can.
Awesome. So, what I've been hearing just by watching on CNBC and CNN, or wherever you can watch when they're talking about, business, commercial real estate is in turmoil. Do you have just anything to add on that, or is there great buying opportunities right now?
Oh, dude, another great question. Okay, so what they mainly talk about there is office space, right? Because that one is in a little bit of a pinch.
Okay.
However, let's double down on multifamily, specifically what I do. So I do believe right now is one of the best buying opportunities that we've seen within the last decade. Now,
Okay.
let's talk about why. So basically, they're in commercial real estate. The funding is different than single family, right? When you get a single family home loan, it's a 30-year AM, 30-year term.
Hmm.
In multifamily, you can get a 25 or 30 year, or sometimes even a 20-year amortization, but there's never really a 30-year term on these loans. And so some people bought with short term debt, which is called bridge debt, which is usually a 2-year term with a 1-year extension if they meet certain criteria.
Hmm.
They're high leverage loans. Or some people bought with what we call variable rate debt. So the debt isn't fixed, the rate can change.
Okay.
Now, our interest rates, if we zoom out, they're not historically crazy high, right? Sure, what happened was they rose the Fed's fund rate very quickly.
Right.
So there's a lot of these people that had a high leverage variable rate loan that now their mortgage payment has doubled. And now that property, the income on that property no longer covers that mortgage payment. And these guys are now motivated sellers because things change so quickly. And
Okay.
so I believe that creates opportunity to help these people get out of that property and then take it over. And then I also believe because interest rates are up, that cap rates, which again, properties are valued on. And so again, cap rates and property values have an inverse relationship, right? So as cap rates, or they go together. So as cap rates go up, values go ultimately down as or inverse, so down. And then as cap rates goes down, property values go up. So right now, before the Fed start cutting interest rates, I think is a really good buying opportunity because if you can finance something and make it work with a 7% interest rate, and then 2 years later refinance out at a 5% interest rate, you are going to pull out a ton of money and probably cash flow about the same on that property, which is
Right.
really cool.
Okay. So, and we talked about this before we started. So, say like New York, a lot of folks are moving from New York to say Miami, and I think you said Florida, or well, I said Florida, and other places as well. Where, what are those folks going to do? What are they going to do with those spaces?
Yeah, that's a good question, right? And so when an area has a net negative migration, then obviously rents start to fall, right? Because if you own the place and occupancy is dropping because there are less people, then you're competing for those same residents, right? So rents start to drop. And so that's why I only invest in places that have a population that's growing and then jobs are moving to. So it's almost like a rising tide raises all ships. You have the wind at your back and it gives you a greater margin of error, right? I'm not going to buy in a city that's dying and catch the falling life. So those people, right? Usually in those cities, you can get a little bit higher cash flow because you're not buying for as much appreciation. But that's definitely not my investing strategy.
Okay. Do you have, now this is just me hoping maybe one day you and I can do business and I could
Yeah.
get one of these properties. Where do you have anything in Miami?
No, so nothing in South Florida.
Okay.
My two markets currently are Northeast Florida and East Tennessee. So I love the Jacksonville area. I have a house just an hour south of that. And then in Knoxville, Tennessee, in that greater area, I own a majority of properties. And then my little brother is a commercial broker with Sperry Von Ness there. And I lived there for a couple of years. So I have a lot of friends up there. So those are the two target markets that I'm currently buying in. So
Okay.
find something in those markets. And yes, I would love to partner with you.
Okay. Awesome. Um, Shoot, I had something on the tip of my tongue. We'll go back to it and jump off of real estate for a moment. We're also going to go back to something I saw on your Facebook, running a 5K marathon. So tell us about that, and most importantly, the prep it took in order to do something like that.
Yeah. So the 5K was just with a friend. It was a first race together with that. So that was a quick, easy one. But I've never done a marathon. I did a half marathon. So a
Okay.
5K, 3.1 miles, super easy.
Oh,
The
okay. I thought.
other
Okay.
Yeah, yeah. I ran a half marathon though for fun. So get this, my family, I was able to talk them to come down from Michigan to Florida. So obviously a lot colder in Michigan during the holiday seasons, and my little brother from Knoxville down here as well. So we kind of had a Thanksgiving and a Friendsgiving, right? I invited all my friends, kind of built a family around me. Well, my parents stayed with me for about a week. And again, I love them to death, but leftovers and company, they get old after about a week, right? And so I was like, I just got to get out the house. So I went, and I've been running. I did 10 miles before, right? And that was the furthest I ever ran. And I was like, I'm going to run a half marathon. And so I just started running and running and running. And then 2 hours and 15 minutes in, I completed it. But Claude, I actually got a really good story for you on this. So,
Okay.
like I told you, we launched a bunch of mailers direct to seller. And on there is different ways to get a hold of me, right? Email, cell phone, and then I tell them to text or call, right? So I want them to pick whatever's easiest for them and they're most comfortable with, right?
Okay.
Some people might be scared or shy of a phone call. And so I get a call on my last, I have 2 miles left. And this older gentleman, he's 73. He owns a 79 unit apartment complex and he was willing to entertain an offer. He calls me while I have 2 miles left. So I'm, 11 miles in on this run, huffing and puffing, bro. I'm dying. I'm getting like blisters on my feet. My hamstrings are cramping up. And all of a sudden, I got this older gentleman that I'm putting on mute every time he's speaking, so he's not hearing me suck wind. And I'm sitting here trying to take this call to figure out what he would sell this apartment complex for on my last 2 miles in that run. So that's actually a good story.
Did you close the deal?
No, he wanted 8 million, and it was too much, man. It's like you said in the background right there. The price is too damn high, bro.
Yeah. All right. So you mentioned 8 million. So what is, if you don't mind, uh, telling us what is the biggest deal?
The biggest deal I've done. So it was 143 unit. We bought for 9.75 million 4 years ago. It's in Lexington, Kentucky. We actually just listed that on the market a month ago for $15 million. And so
Wow.
we'll go full cycle on this deal. Now, here's what makes this deal really special. The debt on it is Freddie Mac small balance loan. It has a 3 in front of it for the interest rate, and it's an assumable loan. So meaning the buyer can take over my
Wow.
debt and get much cheaper debt.
It's
Now,
not
their
gone
plan,
yet?
not gone yet. So they'll shop it for 6 weeks and then they'll do a call for offers. The commercial process is a little different than residential, but the plan for that buyer is, okay, like I told you, we do a light value add plan, right? Again, we don't make it's workforce housing. If someone can go in there and implement a more premium option, so we're talking granite countertops, gooseneck faucets, stainless steel appliances, and then command a premium rent, they're going to be able to force the income up and therefore the value of that property even higher.
Okay. So although you're making it a good amount on top, you left room for them if they wanted to come in and really put the over the top finishes on. They can make some money as well.
Yeah, you always got to leave some meat on the bone for the next person, right? That's how you go full cycle.
All right.
So,
Awesome. Okay. All right. So whoa, it was on the tip of my tongue again, but I wanted to let you finish. Uh, let's dive into. Tell me more about the multi-family wealth nation.
oh man, brother. So, all right, listen, as I've been in this space, what's created most of my success is having the right knowledge and the right network, right? So, mentors around me and then learning this business. Because here's the thing, I couldn't go to a college and be like, yo, I want to be an apartment investor. They teach you how to get a job, they don't teach you how to be a business owner and entrepreneur. And so, I truly believe that I can help change the outcome of other people's lives by teaching them what I did, how I did it, and then building a network around me and leveraging my connections. So Multifamily Wealth Nation is just that. It's a real estate investing education company where our goal is to transform the lives of those that we work with, give them the knowledge, the systems, the tools, and then help with the implementation step by step to build their real estate investing business, specifically in the apartment investing side. And what really fires me up about this is it's not like I work at Coca-Cola and I'm selling sugar water, right? Which is probably a detrimental product to people. Again, this can change not only someone's lives, but their kids, and the lives of those around them, right? So for example, you look at me, my dad now owns a bunch of real estate. My little brother, he's in real estate. He's a commercial broker. Literally the outcome of my family's lives has been altered for the better because I took the leap, proved it wasn't, all this hoopla they thought it was, did well, Now they're in it and followed my footsteps. So if I can inspire, help, teach, educate, and lead others to do the same, it's really something I'm very passionate about, and it gives me a lot of fulfillment.
Is it, how long is it? Is there multiple courses? Just can you break it down a little bit for us?
Ooh, it's a great question. So first off, I would encourage someone to go to our website, multifamilywealthnation.com, and you can see more there. Now, the course we're going to launch officially January 1st. So we haven't launched yet, and it's going to be a year long once they're in there, and then a subscription after that, or renewal. And what it's going to be is there's going to be a full online training center walking you through step by steps, the ins and outs of this business, right? Using all the systems and tools that we used. Then we're going to have live interactive classes weekly where you can learn the different topics. There's going to be different topics taught. You can ask questions, get your deal underwritten. And then we're going to have ultra premium member only events where you can meet these people in person. We're going to have education and then networking events as well. And I truly believe that combination of the education, access to mentors in the space, and then in-person events, if someone takes it seriously and puts in the work, can really help them get where they're looking to go faster and with less mistakes.
All right. Now, so say if someone purchased a course, is in there year round, found the deal, they don't have the capital. You guys help them in order to get the capital, or will you actually help fund them as well?
So ideally would love to partner with them if it's a deal that's in my buy box, right? And then we can partner, fund it, take it down together. If, for example, it's in a market I'm not in, I'm more than happy to help connect them with others in the industry so they can do it. And
Okay.
then the third option is syndication, right? So that's raising capital from investors. It's how I took down my first deal. So as long as they've created the relationships in the community, they should be able to syndicate it or know a capital raiser who can raise that capital for them in the community as well.
Okay. This is what it was. I know, I'm not sure if you're familiar with DJ Envy. I'm not sure who he's partnered with, but there's a lot of negative news that he's in a syndication that is possibly doing some illegal stuff. So for folks who maybe looking for a syndication, how do you know the good guys between the bad guys?
Yeah. So that's super awesome, right? And first off, these syndications, they're a Securities and Exchange Commission's filing, right? So they're filing through the SEC, and they're usually like a Reg D 506B or Reg D 506C. So there is some protection there within that as well. But what I would do is I would vet the operator first, and then I would vet the deal. Meaning, does this operator that you're investing with have a track record? Have they gone full cycle before? And so this way you can see if they've done 10 deals good, odds are the 11th is going to be okay as well, right? You can look at then, okay, once we've checked that box, is it a good operator? Let's then look at the deal, right? So you can get access to their underwriting and see sort of their pro forma or what they believe they can operate the property as while they have it. And then you can see if those numbers are very aggressive and you're like, oh, this is best case scenario, probably not going to happen. Or you can then see if these are very conservative numbers and they might exceed that, right? So for example, our first deal, we way over delivered, right? We more in that 3 years, we more than doubled the money of those that invested with us. And that's pretty cool if we're being honest.
All right. How often, how fast do the investors want a return on their investment?
It's a good question, right? So multifamily is a long-term game, right? So when we underwrite, we for a syndication, we do 3 to 5 year holds. So sure, they're going to get cash flow, they're going to get tax benefits along the way, but they'll get primarily most of the capital when we sell, right? Their initial investment, and then obviously that unlocks the equity that we, forced through appreciation in the property as well.
Okay. Now you mentioned there's pretty much two areas where you heavily invested. Is there an area that you are eyeballing and you may want to dip your toes in?
No, I'm a big fan of depth over width, meaning, it's like a bird in the hand is worth two in the bush. I try not to get shiny object syndrome because each area you go in, you got to know the area, the ins and outs of it very well. And then also you got to have those relationships with the brokers, the property management, the community bankers there. So it's like, I think I would rather dominate a certain area. That way I know the ins and outs and have an economies of scale,
Mhm.
rather than chase too many birds and end up with none.
Okay. We talked about it beforehand. Can you just elaborate a little bit more the pros and cons between if you're choosing to invest, difference between a red state and a blue state?
Yeah. So, I mean, as we look at it, right, again, we look at policy, which is often tied with politics. If you have a state like California, New York, or Illinois, usually they're a lot more tenant friendly. And so with that, like you said, these people, if they're not paying rent, it could be 6 months to evict them. And like also you said, there's people that take advantage of that, unfortunately, right? These rules meant to protect these renters. And so as a landlord, you're still responsible for that mortgage. And if they're not paying the rent, they're probably beating that place up.
Right.
So it's very tough in that point to be able to do that. And I'll give you an example of, I saw it happen here when I had a property in Louisville, Kentucky. Kentucky, although a red state, Louisville is a very progressive area within Kentucky. And towards the end of when I was there, they put regulation mandating that complexes accept Section 8 tenants. And again, that's not my wheelhouse or my niche. So at that point, I decided that I wasn't going to invest in Louisville anymore.
Okay. Okay. So you just had to pivot, right?
Pulled out. Yep.
Yeah. All right. Let's go back to multifamily wealth nation. Have you announced the price, what it'll cost per year yet?
Yeah. So check this out. If someone joins before January 1st, we're going to do it at $6,000 for the year. After that, it's going to be $7,500. And that includes everything, right? Access to the events. And then after that, it's going to be $1,250 a quarter for a renewal after that full year. And again, it includes the events, the education, access to the mentors, the group coaching, all of that.
Okay. Are the events open to anybody, or are these events just going to be specifically for those who are in the program?
Members only, right? We
Okay.
want to be able to make sure we screen and vet all the members there, because here's the deal. These are people that are doing deals together, right? They're going to
Right.
be doing 7, maybe 8-figure deals. And we want to be able to control that room and make sure that everybody in there has access to the mentors, the education, and the guidance. So think of it this way, Claude. If I'm bowling a bowling ball down a lane and I can put the bumpers in there, I'm probably more likely that I'm going to hit some pins, right, and get it, do well. Where if I got someone who's got no guidance, no bumpers, right, essentially, there's a better chance they get a gutter ball. And so if
Right.
I can kind of put those training wheels on these people
Mhm.
and curate the room myself, I think I can create much better odds for success for everyone in there and create a safer environment for them as well.
Okay. Because I was thinking, because some of the events that I went to, they had, you have, I guess, your VIP type tickets, and you get extra incentives and things like that you can go to. And then there's like the general admission pass. I didn't know if there was going to be something large scale like that, or is it more so this is really just geared toward those who are in the program?
Yeah, so eventually we'll work our way towards a flagship conference where we
Okay.
bring in big speakers like a Robert Kiyosaki and things like that. And that'll be open to the public and really geared on creating an experience and empowering those with knowledge. But I'm curious, I see the lanyards in the back. What events did you go to, my man?
So I've been to Invest Fest, and I'm not sure if you're familiar with them. There's two guys that follow their podcast kind of religiously. They're Troy and Rashad. So I follow them. And then this one was just something I found in my backyard. It's called the Black Wealth Summit. I can't remember the guy's name who was the organizer of it, but he actually had the mayor of Maryland there. So I was actually impressed. The mayor showed up, so it was pretty good. Just talking about financial literacy, and those are pretty much the big ones. But I always kind of wanted to go to a Grant Cardone, but I didn't really know anybody personally who's really interacted with them. But your story, 'cause it seems like he just kind of, if you're thinking, this big, he'll just make your dream or your thoughts that much bigger. And so I've heard about that, and the books can really do it. But I was like, I don't know if I really want to go to a conference. But you reassured me that definitely somebody I would definitely want to go and participate in one of his conferences.
Yeah, so I've been to 10X GrowthCon, his big
Okay.
conference. I went to the one in
Yes.
2020 in Vegas right before COVID.
Hmm.
And what I really liked about it, sure, it was very large, so it wasn't intimate. However, the caliber of speakers that he had there was second to none.
Okay.
He had like Usher speak there. He had, oh gosh, Floyd Mayweather. I mean, it was an incredible what he was able to have speak there, and these access to speakers that I wouldn't be able to see publicly without going to something like that.
Right, right. Okay, so yeah, it's kind of like EYL, but what I noticed is that this conference was a lot small, more intimate, and I really had more of an impact. I was able to really network and actually have impactful conversations and provide value, and then others provide value for me. When I went to the bigger conferences, like kind of like Grant, when you get the big names like you mentioned, it kind of that's why it was kind of off-putting. It was like, these guys are already millionaires at the top. Am I really learning anything from them, or are they really just kind of selling me almost like a sporting event type deal? But it sounds like I should definitely go. I'll definitely get some value out of it.
Yeah, I think you do both, right? The local ones and the big ones, right? And I think there's a lot of value in it. And sometimes you're right. It's there may be the cream of the crop and quite a few steps ahead of us, but still it's inspiration. And I think
Right.
that thinking big, like you said with Cardone, 10x, not 2x, can really, really help that. That's why I'm big. I'm like, look, I'll shoot for the stars. And if I end up at the moon, I'm okay with it.
Right. Absolutely. Yeah, I think I got a little bit of my risk taking from my poker playing, which is perfectly fine because I don't. My kind of my motto is whatever I did last year, I gotta one up it a little bit. If even if it's just a little bit better than I was doing last year, I'm all right with that. As long as if I'm staying stagnant and just kind of plateauing, there's got to be some changes. I maybe need to pivot and kind of reevaluate and move forward. But you provided so much value, so much insight today. This was absolutely awesome. I was not expecting Josh, I'm going to be bugging you about a lot of things going forward, and I'm definitely interested in the program for next year. I just got to figure out. You said this now. It's kind of once a week. You guys meet up.
So we're going to have calls weekly, multiple
Okay.
calls. So I'm kind of crowdsourcing the genius, meaning I'm having other industry experts in the space teach as well on
Okay.
live group coaching calls through
Okay.
Zoom. And then we'll have some that have topics, some that are just kind of open forum, and some specifically for networking. And so that way you're continuously learning as well as having a full online platform. That's like literally a 4-year degree for multifamily investing or a business in a box, right? Think a franchise like model complete with systems, tools. So instead of opening up like Josh's hamburgers and trying to figure it out, I'm opening up a McDonald's, right? A system, that works and has been proven.
Oh, that's a good way to put it. I like that. Yeah, this is great. This is absolutely great. Is there anybody else from high school or anybody else from home that's in the real estate game?
Oh man, that's a good question. I don't think so, man. I wish I had more friends that were in this path. And honestly, I'm always open to give them a push, kind of saying, hey, look, this is definitely the way to go. But Claude, the truth is what I found, and this is pretty heavy hitting. If I were to take a room full of people, let's say I had 100 people, and I were to say, hey, who wants 5 figures a month and income coming in for the real estate portfolio? So they could be, let's say in Jamaica on vacation, that money still comes in.
Right.
I guarantee every single person in that room is going to raise their hand, right?
What's to put them?
Now, yeah, when I show them what it takes to do that, right? The discipline, the sacrifice, the long hours, right? That it takes to get there. A lot of these people are going to start dropping off. And that's the reason why it's the 99% and the 1%, right?
Right.
And also there's people that just don't know better, right? They just kind of went to school and got a job and never thought an alternative path. However, again, a lot of this doesn't come easy. There is risk. You have to bet on yourself and you have to work very hard, right? For me, for example, for apartment investing, it took me 13 months from when I started studying till I bought my first complex. So
Right.
Claude, if I would have gave up 8 months in, I would have had put 8 months of work in and had zero results.
Right.
8 months of work for zero results.
Right.
Now you look at me 6 years later and I've done very well with apartment investing. However, it's sort of like, most people underestimate or overestimate what they can do in a year and underestimate what they can do in 5.
Hmm. Now, let's hit on that a little bit more. Do you think this is something, or is it even plausible to do if you have a full-time job and you want to do this on the side? Do you think it's possible?
Yeah, correct. You just got to have discipline and willpower and goals that are much bigger than yourself, right? Because, and watch, I'll give you an example of this, actually a really powerful example, Claude, and watch this. So let's say we're in New York City, right? And you're on a skyscraper and you're on the 100th floor. Now there's another building, let's say it's 20 feet on the other side of you. If I had a plank that was just a wooden 2x4, and I'm going to say, hey, Claude, I'll give you $10 to walk across this plank 20 feet, 100 stories up, are you going to do it? No, right? You looked at me like I'm crazy. Now, let me say this. Let me say I put your family, right? Your parents, siblings, other family in that building next door, and that building's on fire. And if you can get over there, you can save them. Are you
Right.
going to do it?
Now the story changes now, yes.
Yeah, and the scenario is the same. The only thing that changed is your why. Why are you doing this? And so when you have a why that is that strong, it's
Right.
not if you'll be successful, it's a matter of when. And any
Yes.
roadblock or hurdle you're going to overcome. And so that's why I think it's so important. And goals can be kind of woohoo, but at the same time, if you don't have a crystal clear vision of what you want life to look like and why you want that, then you're not going to do this. And for me, it's not money that matters. Money is just a tool, right? I have a very unemotional relationship to money.
Okay.
But what I want, Claude, more than anything is I want to be the kindergarten room dad. I want to coach Little League and I want to travel the world with my family. Now, I don't have that yet. I'm single, not married. I got to get the wife and then the kids. However, that's the goal, is to pay the price now so I can pay any price later and own my time, because you don't get a do-over for kids' birthdays, kids'
Right.
soccer games, and things like that. And I want to make sure I have the absolute best for myself and my family.
Right. Well, I'm trying to see which way I want to go first. Let's go this way. This the tougher route first. Now, if you see friends or maybe family struggling and they see you, how successful you are, and they say, "Hey, Josh, you know, how do I get what you have?" And you tell them, and you follow these steps, and you follow just exactly what I did. I think you can get there as well. And maybe some people take it, some people don't. How do you? I guess how do you battle that? For me, it's difficult because I see people struggling, and I'm not saying necessarily follow my footsteps, but they're just kind of stuck in this bubble, and they think that they have to work for somebody for themselves. And I'm not telling everybody to be an entrepreneur, but how do you got to, I guess, either look past the people that just don't want to be helped, or how do you help those who seems like they just make a bunch of excuses?
Yeah. So I think it's hard, right? Because you got to want it, or they got to want it more than you want it for them. And I've had plenty of people that have had that. They see 8 years in the making of real estate investing and where I'm at. And they're like, Josh, I want what you got, or you got lucky, or comments like that. And initially it's like, okay, cool. You can think what you want. But what you didn't see is the 8 years of trial and tribulation, right? When I moved to San Diego, Claude, after 6 months, at first when I was at home, my student loan started kicking in. I had less than $1,000 to my name living at my parents' house. Then I invested every dollar I made to buy a house. I had to have my dad co-sign. When I moved to San Diego, I barely had enough money. I was driving an '04 Impala SS with 220,000 miles on it. Sold that for $1,500 to pad my bank account to rent a room there. Like, they're not seeing the sacrifice I went through. Look, I
Okay.
lived on an air mattress, didn't buy furniture because I wanted to have that money work for me. And
Hmm.
again, that's where we talk about it. It's like, hey, look, they can see the end result and want that, but
Hmm.
they're not willing to walk the walk that I did to get there. And the
Right.
more discipline and sacrifice you can have, the faster you can get there. Now, I'm not saying it has to be all this bad, but if you can live a life or two in uncomfortable situations to live the rest of your life like whatever you want, I think it's worth it. I've been able to be retired now for a couple of years. Well, not have a boss or a job. And truth is, I don't have to work if I don't want to work, right? I work because I want to, and because it gives me purpose and passion.
Right. I guess your mission is just to help others, because you see the lifestyle that you created for yourself, right?
Yeah, and the other thing is too, man. I've tried helping a lot of people, and what I've realized is without skin in the game, they give up or walk away, right? So I've
Right.
had others that I provided resource for, invested my time, and they didn't value it, right? Because they didn't have to put any input for it. And so that's why I believe a lot of people are like, oh man, somebody's just trying to sell me a course or things like that. And sure, there are people that are doing it for the wrong reasons. But I also believe that when you make an investment in yourself and your education, you're less likely to give up, right? Because you're asking me to invest my time, my energy, my resources in you, but you're not willing to invest in yourself. How serious are you at that point, right?
True. 100%. 100%. Yeah. Yeah. Now to think about it, yeah, if I have a significant amount of money, I don't want to just, I guess, blow it or waste it, right? If you put your money up, you're going to, you want to get some return on that capital. So you're going to invest your time. And because I'm sure you could probably do your program and say, let's do it for $500. You get everybody in the world to sign up, but you don't want everybody in the world. You want people that are actually going to take it serious and, you know, make an impact and utilize the information and the time that you're providing for them.
Yeah, and another really good thought for you, and actually, this is a really good casino analogy. Let's say we're at the roulette table, right? And let's say we're betting an even money bet, like red or black or even
Right.
or odd, right? Our payout is 1 to 1. But let's say we bet on a number, right? Like, I don't know, 18. And I
Mm.
think it's like a 36x payout. But your odds are 1 out of 38, right? If there's two
Right.
zeros on there, a zero and a double zero. So with risk, your reward goes up as well. But education is the only investment you can make that not only reduces risk, but maximizes upside, right? So your reward goes up and your risk goes down. So think of this, you're able to poke holes in deals so you don't lose money and then operate them more efficiently so you do make more money. And so that's why I'm a big fan of education. It's like, Claude, let me ask you, if I told you today I want to be a surgeon and you're going to be my first patient, I'm going to do heart surgery on you, would you let me do it?
Absolutely not.
Hell no, you would be crazy. You would be
Right.
dead. You
Right.
wouldn't make it,
Right.
guaranteed.
Right. Right.
But someone, what they do is they go to school, they have a residency and a fellowship, and then they do it. So I don't know why people think it's so crazy to invest in education for real estate investing. And in fact, I think this is, if you're going to gamble with your family's financial future, one of the most important things there is. I think you're crazy.
Right. That's it. Yeah. Yeah. 100%. 100%. That's a very harsh reality, but a good way to put it. That'll open up some eyes. That's for
It's
sure.
the truth.
Yeah. Do you keep a kind of, I guess, a small circle, or do you still have, because of your success, I guess what question I'm asking, do you think that people kind of are jealous of you or maybe feel some type of way? Or do you still feel that you're able to interact with anybody, everybody that you'd want to?
Well, I mean, first off, you try to stay humble, right? It's not like, you're out bragging or anything like that. So you treat, the janitor the same as a CEO in any company, right? And I think that says a lot about a person's personality. And for as far as people, I'm a quality over quantity person, right?
Okay.
So I think if you hang around five alcoholics, you're going to be the sixth, right? If you hang around five millionaires, you're probably going to be the sixth. And so, in my opinion, my circle is those that have a growth mindset, that support me, and I do the same for them, and that we're pushing each other to do the best version of each other in all aspects of life, man. And honestly, that's what I want most out of my circle. We don't sit around watching sports games all the time. We don't gossip about other people. Instead, we discuss ideas and goals and how we're going to do and be better. And that's what I found is, man, it's like, okay, your brain, if you can control your thoughts and the inputs in there, it greatly helps control the outputs. And then you take better actions. And then all of a sudden you get better results.
100%. It's so hard to have that growth mindset now because, I mean, you have social media and there's just so many distractions in the world to keep you from really maintaining greatness. I think a lot of people nowadays are fine, content with just being, lack of a better word, just average and just getting by. Um, I don't know. The life is too short, especially during COVID. That really took me by storm. I never thought anything like that could happen. Never in a million years for us just be at home and stuck and can't do anything. So that really opened up my eyes because I'm somebody who likes to travel. I'm sure you like to travel yourself. Um, and so that really scared me, and I think that's really drove me to do what I'm doing now. Not necessarily this is the best approach that I could be doing, but that's what I'm passionate about. It's what I enjoy doing right now, and I have a little bit of a freedom to be able to do this right now. So that's what I'm going to be doing. So it's awesome. It's refreshing to be able to talk to somebody like yourself, and for somebody who was from same high school and same area, grew up same area as myself. I feel like I wasn't alone. I'm not crazy. So this is absolutely awesome. I will definitely 100% keep in touch. Your program has me 100% intrigued. I will give up poker for a whole year to dive into real estate more. And it seems like you have the blueprint and you also have the individuals around you in order to kind of, for me to 10x, 20x, 100x, whatever I'm doing right now. So I'll definitely be in touch. But we are over an hour, so I want to be respectful of your time. So I truly, truly, truly appreciate your time tonight. Necessarily didn't get the views right now, but I'm gonna be posting this after we get off and talking to some of my old heads in the poker room who will actually appreciate and enjoy something like this. I think maybe people are our age right now are maybe a little discouraged when you think about buying a home or real estate. They don't feel it's really attainable right now. But hopefully, if we get a few more eyes on this, hearing you, um, you give me the confidence to kind of run with it. So again, I truly appreciate you taking the time tonight.
Of course, Claude, thank you. And I want to leave your viewers with a couple last words. One, think big, start small, right? So it's, my first house was I bought with like 5 grand out of pocket, and now 8 years later, I own equity in 11 apartment complexes. And then also that it doesn't happen overnight, but it does happen over time, right? Consistent action repeated day in and day out is what gets you there. Consistency trumps intensity all day.
Awesome. Got to play the long game, right? It's not a get rich quick scheme. Got to have, you guys watch Josh. Join his program. He's going to tell you the systems how to do it. Like, right, Josh? This is not a get rich quick scheme. It's going to take some time, some dedication, right?
Yeah, it's hard work, but it's worth it, right? Nobody ever said it'd be easy, but I can promise you it'd be worth it.
Awesome. Awesome. All right. Thank you guys for viewing. I truly appreciate it. This is All In Society and Friends with Claude and my special guest tonight, Josh Roosen. And definitely check out his website, multifamilywealthnation.com. You guys have a wonderful night. I'll see you next Tuesday.